If silver was traded only during COMEX hours, it would reach like a ridiculous price of something like 20 cents per ounce right now. Whereas if it was trading only outside of the COMEX hours, it would currently be trading at around $200 an ounce.
Silver stackers are fascinated by this idea that the silver price is manipulated. Nothing conjures up as much interest and intrigue as silver price manipulation. Should silver be 20 cents per ounce on the COMEX? We're going to talk about that. But what about this fact that right now we have 140 days worth of global silver production sold short on the COMEX? Today, we have a special guest, our friend Oren from the Silver Hermit YouTube channel. We're going to dive into all this. We're going to talk about how the silver price is manipulated, and then we'll wrap up with an interesting discussion about why. Oren, welcome to Ron's Basement.
Hello, how do you do?
We're doing great, Oren. How are you?
I'm fine, thank you. Of course, as we're speaking, we're seeing the price of gold and silver again smash down. And of course, it's kind of sad seeing it, but we're kind of used to seeing it. It happens almost on a daily basis. So we're not getting, we're not getting too excited about that anymore. But other than that, everything is fine.
Good. Well, it's great to see you. I consider you one of the leading minds. You do great analysis on the silver market, and you kind of dug into what goes on in terms of price manipulation. Why don't you start out by telling us, like, what does it take to start out in terms of being able to manipulate the price of silver or any commodity for that matter?
Well, as a matter of fact, it's not very difficult to manipulate the price. If you have a commodity exchange, and if you have the ability to sell a commodity short, then you can manipulate the price. Of course, in order to do that, you need to have a large short position, what we call a concentrated position. And in order to do that, of course, you need to have a large sum of money. So it's preferable that you're some sort of a financial institution, like a bank, for instance. And the only problem with manipulating the price this way is that it's illegal. So you also need perhaps a captured regulating body. Yes, you need the regulator to look the other way. So if you have enough money, enough dollars, we should say, and you have the regulator, let's say, looking the other way, then you can simply open a large short position. And whenever the price rises, then you sell into the market. Again, not physical commodity, because you don't have the physical commodity. You sell futures contracts, which if you have enough dollars, you can conjure out of thin air in any amount. And the interesting thing is, because the price is derived from trading with futures contracts, then selling short gives the appearance of supply, of an abundance of supply in the market. Of course, it's a commodity which doesn't exist physically, but so long as nobody is asking to receive that commodity, so long as most of the trading is done, only in dollars, and at the end of the month, the traders don't ask to receive the commodity, they don't stand for delivery, then it's okay. It's completely theoretical. And you can, when the price rises, you extend your short position, and when the price falls, you can size it down. You can buy back some of that, buy back some of those contracts, and you get to manage the price. And it's not very difficult to do that.
Interesting. I'm going to ask you a question. To what extent does the small size of the silver market play into that? I mean, we're talking about, on an annual basis, maybe 1 billion ounces roughly of physical silver are provided to the market. That's a $25 billion market. I don't think this necessarily directly plays into what you're saying, but also the COMEX registered inventory, I just looked the other day, is down to like 42 million ounces. That's less than a billion. I mean, does the fact that it's a small market relative to, let's say, gold or even oil, or of course the S&P 500, does that play into the ease with which it can be manipulated?
That's a good question. I haven't given that much thought.
Mm-hmm.
I'm not sure about that. I need to think about it a little bit more. But I'll tell you one thing. One thing is certain, and that the fact that the price of silver is so low makes it very vulnerable to manipulation, because you certainly
Yeah.
don't need a lot of money in order to manipulate it. It's
Yeah.
for banks, these are negligible sums, very small sums of money.
Yep. Yeah, because I think about Apple, let's say Apple Computer, whatever, a $3 trillion market cap. If someone wanted to manipulate the price of Apple stock down, I would imagine it would be much more difficult than the silver market, which is a tiny fraction of that amount. What about when you look at the concentration of the short position in let's say silver, and I guess we can touch on gold as well. How do you think that plays into this manipulation? If you're looking to buy gold, silver, or platinum, do yourself a favor and check out PIMBEX, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think PIMBEX is best, and you will too. And be sure to tell them that you're from Ron's Basement.
You need a concentrated position in order to control the price. But a concentrated position is illegal by definition, because the only reason to have a concentrated position is if you're trying to manipulate the price. Now, of course, if you go and ask the banks, why do they have such a large short position, they're going to tell you, oh, it's not our position. We're holding it on behalf of our clients. Because there are entities, of course, mining companies and bullion dealers, who have a legitimate need to short the precious metals that they are holding. Why? Because they are either producing them, getting them out of the ground, or holding large inventories of precious metals, and they need to protect themselves against a sudden drop in the price. This is legitimate hedging. But the size of the position, which exists literally, is a lot larger. It's huge. It's far larger than we assume that those legitimate entities require in order to conduct business. So, for instance, you mentioned the fact that currently there's like over 140 days of global production of silver short, which is huge. It's if you compare it to other commodities, it's the single commodity in which there's the largest short position compared to all other commodities out there. Larger than gold and larger than the short position on platinum. It's interesting to say these three precious metals are the three commodities which have the largest short position, and the largest of the three is silver. And I think the reason for that is because silver is also such an important industrial metal. Mm-hmm. I think this plays a role, because I think that somehow, look, if the price of gold rises, then it certainly reflects bad on the dollar, but it won't kill any industry. But if the price of silver rises considerably, it won't kill the electronics industry by no stretch of the imagination, because they use very small amounts of silver in every iPhone, for instance. But they will need to reprice those products. They will need to recoup those extra costs, and it will trickle down into consumer goods. It will trickle down into the CPI. And this is what I think they're trying to prevent. I think they're trying to, because when the price of gold rises, I don't think it reflects so much in the CPI. But if the price of silver rises, I think it will eventually reflect in the CPI in consumer goods.
Yeah, and when I look at this chart that you provided me, it's interesting. So we have silver with 140 days of production sold short. If you compare that to, let's say, copper, looks like about 10 days, soybeans, cotton, all less than 20 days. I think the only other larger one that I see sticking out there is coffee, but that doesn't even get to 40 days. And I know coffee is a massively traded commodity as well. So you've got silver, which is 5 to 6, 7 times more from a production day basis sold short.
Yes, some analysts argue that by controlling the prices of precious metals, they are able to control the entire commodity sector.
Yeah.
And the rationale behind that is that there are certain relations, historic relations, between prices of certain commodities. For instance, the price of oil to the price of gold. So indirectly, by controlling the price of gold, you're able to also control the price of oil, and that saves you a lot of trouble.
Yeah, interesting. So we know there's this huge short position. We know that it takes money from the banks to do it. We've established that. What about evidence, peculiar trading that happens around 10 a.m. Eastern time on the markets? Did you happen to see anything there, Oren?
Well, everyone who's been interested in this market for quite a while has noticed this peculiar phenomenon that the price of gold and silver tends to drop very sharply when trading at the COMEX begins at almost precisely 10 o'clock New York time. And, it used to happen occasionally, and lately it has been happening almost on a daily basis.
Mm-hmm.
Now, I argued with people in the industry, and they say, okay, when there's like when the COMEX opens, then all the orders that accumulated, let's say before the beginning of trading, they suddenly get executed, and lots of people suddenly. Lots of selling orders are suddenly executed, and you get a price drop. And they try to explain it this way. It's just normal trading. But I argue that no, it's in my view, it is not rational. And I'll explain why. Because for instance, if you're a trader and you're trading on behalf of, let's say, a mining company, and you do legitimate hedging. You need to sell forward the production of that mining company to insure them against sudden drops in the price. They want to sell forward their production. It's legitimate hedging. And suppose that you encounter this phenomena in which almost every day, the price drops at 10 o'clock exactly. Then if you're trying to get the best price for your customer, yes, you will avoid this time of day, of course. You will try to sell that production, that gold or that silver, you'll try to sell it at any other time in order to get the best price. And also, let's suppose that you're trading on behalf of a large gold or silver consumer, such as a jewelry company, for instance, right? And they're supposed to purchase futures in order to protect their customers from a sudden rise in the price. So you're going to try and and you notice that every day at 10 o'clock, the price drops. So you're going to try and buy gold and silver at exactly 10 o'clock because it's the best time to buy gold and silver, right? So
Right.
This phenomenon, the fact that traders are going to try, the sellers are going to avoid these hours, and the buyers are going to try and buy at this exact hour, it will cancel out the phenomenon. In a normal market, this phenomenon, even if it exists, if there's a real reason for it to happen, market dynamics will cancel it out very quickly because people are rational. Rational traders behave, they react to such phenomenon, and they tend to cancel these out.
Yep. Arbitrage. People will act in their own best interest, and things will get equaled out.
Exactly. And you showed, a few days ago, you showed one of my charts, and it turned out that, it was cut out on both ends. So you showed only 6 instances in which the price was smashed at 10 o'clock. As a matter of fact, the chart, there were 8 days. Almost.
Oh, but wait, there's more, right, Oren?
Wait, there's more.
What about the fact that I like to quote this statistic on February 2nd? That was the day that we got the unbelievable jobs numbers a few Fridays back. I saw a tweet, and I've talked about this a lot, but during a 1-hour period, the price of silver dropped about 4%, about 80 cents per ounce after that great employment number. One 15-minute segment when that drop was occurring, and it was the portion where the biggest meat of the drop happened. Almost 12,000 contracts were traded, and the math on that comes out to the equivalent of 60 million ounces of silver, which if you figure the mines are making 900 million ounces, that's like 7% of the world's silver production traded in 15 minutes. I mean, it doesn't make sense.
Yeah. Annual production.
Thank you. Global annual production.
Yes. Yeah, well, you see, people can make all sorts of excuses. They can say, oh, there are traders, they panicked, they saw this data, they were amazed that the jobs data was so strong, and suddenly they decided that they have to get rid of that silver and it's legitimate trading. They can argue that. But you see, they can argue that when you have big news, like today. Today we've had a stronger than anticipated inflation figure, CPI. Now, according to the twisted logic of Wall Street, when the CPI is stronger than expected, then the price of gold and silver is supposed to drop. Of course, it's counterintuitive, or it makes no sense, because, of course, gold and silver are hedges against inflation. So if inflation is rising, you're supposed to buy gold and silver, not sell them. But right. According to Wall Street logic, again, very twisted logic, they think that if CPI is higher than expected, that means the Fed will need to tighten monetary conditions, or at least not cut rates like they were planning on doing. So that means the dollar is going to be stronger and gold and silver need to be weaker. Now, of course, I don't accept that, but at least there's an excuse. At least there's some rationale behind what you're seeing in the market. But as I was trying to demonstrate, those price drops, which happened exactly the same time, they happened almost every day now. And of course, many of those days you had no news at all. You had no excuse at all for the price to drop. So unlike today, there are many days in which this just simply happens all of a sudden in an inexplicable way. This is, and for me, there's no other explanation to that other than manipulation, other than price manipulation. I want to tell you something. You know, this puts me and you in a very awkward position because, look, I've been telling people or advising people. I'm not a financial advisor, but I've been telling people my opinion that they should have some exposure to gold and silver, and they haven't done well compared to other assets, compared to Bitcoin, and compared to, I don't know, Nvidia stock and all sorts of things that just keep going up no matter what happens.
Pretty much anything, Oren, but I'm in the same boat with you. So yeah.
And people come to me and they say, well, look, Oren, the price is not rising as you told us. What's going on? Why is gold and silver not protecting us against inflation? And I need to go come and tell them, oh, it's because of there's manipulation. Well, it looks, we have a saying, my father, God rest his soul, he used to say when a dancer doesn't know how to dance, he says that the floor is crooked. Yeah, they had the saying, and it's a very awkward position because you turn out you're like the dancer who's arguing that the floor is crooked. Oh, why is the price not rising? Oh, because there's manipulation. You kind of sound like you sound
Right.
dumb.
But let me interject one
But
thing, one thing, Oren, and that is
just let me
I think
finish the sentence. That,
okay,
but what if there is manipulation? What if there
right.
actually is manipulation? What am I supposed to pretend that it doesn't exist?
Yeah. Well, and I think we're also there's an important differentiation between short term and long term. That this is short term noise that we're dealing with right now. This twisted logic of Wall Street, as you referred to it, that when inflation goes up, gold and silver go down. But over a long period of time, if inflation goes up and up and up, that by definition means the value of the dollar is going down, down, down. And there can be this. I think it's a symptom of this fact that this monetary. I like to say it feels like we're living through a monetary mirage. That what the Fed has done and kind of built upon over the last number of decades has created a complete fantasy world and almost like a mirage. And so that within that mirage, sure, the mirrors and the smoke machines can get adjusted just right so that, yeah, oh, yeah, we have high inflation, gold and silver go down. But when everything comes home to roost in the end, you can't argue the fact that if we have high inflation, that means the value of the dollar is going down and that precious metals are becoming more valuable. Although on a day like today, when silver's down 4% or whatever it's down at this point, it doesn't feel that way. But I think it's important that we keep a long-term perspective on it.
Yes. So, we're in this, as I said, we're in this awkward position in which look, logic, reason tells us that the price of gold and silver is supposed to rise, but it's not happening. But what I wanted to say to people, uh, uh, in my view, this manipulation it's not just noise. It's for a long time now, it hasn't just been noise. It's substantial. It really has kept the price down. But the thing is that, in my view, every manipulation is destined to fail. And that's the important bit. Why do I continue to invest in precious metals? Because I believe that every manipulation is counter to market conditions, to the laws of economics. Because if you keep the price of a commodity artificially low, that means that you're encouraging the consumption of that commodity, and you're discouraging the production of that commodity. In other words, you are creating a shortage, right? Because miners, for instance, they're not profitable. So eventually they're going to downsize. They're going to produce less of that metal. Less metal is going to come into the market. And consumers, well, especially consumers of silver, they don't see any reason to save or to try to use as little as possible. No, they use as much silver as they want because it's so available, it's so cheap for them. So they're not trying to save it, and eventually we're going to have a shortage. And every manipulation, the moment you have a shortage, the manipulation ends.
Yeah,
The moment you have a physical shortage, of course.
I find it interesting too. I've been reading different statistics. I mean, we know the Silver Institute says there's been a deficit for the last 3 years, and that deficit, if you add it up in aggregate, I think maybe comes to 400 or 350 million ounces. But I've also been reading that over the last 3 years, the amount of metal available in the warehouses of the COMEX and the LBMA have both dropped combined right around the same amount. So for now, they've been able to plug that artificial that deficit that has been created by artificially low prices, potentially with that inventory coming out of the big metals exchanges, but they're both pretty low. I mean, they can't go too much lower. And like you said, and I love that, Oren, because I agree with it, you can only manipulate market forces for so long. You can only, an airplane eventually has to land, right? It can't, well, in theory, it can't stay up forever. Like, you can only fight gravity for so long.
Yes. Now it's what you said is very important, because the manipulation can go on so long as there is some physical deliveries made.
Yeah.
Because think about it, the COMEX assumes to set the price, right? And why does it get to set the price? The answer is, of course, because there is some physical delivery being made on the COMEX. Even though it's a very small fraction of the overall amount of trading done, and even though most trades end up in only in dollars exchanging hands and not physical metal, the fact that there is some metal in the inventory in the warehouses of the COMEX, this is what grants it legitimacy. And once they run out of metal, like really, they're not able to make any deliveries, and of course they're not going to go declare bankruptcy, because they can always force traders to settle in cash. So they're not going to go bankrupt. But the moment people realize that the COMEX is not able to deliver metal, I think it's going to be the end of the manipulation, because people are going to treat the COMEX price as less relevant.
Yep.
The price on the street, the price in your local coin store is going to matter more than the official price of gold and silver.
Yeah, kind of like you would see when I was in college. I studied in Budapest, Hungary, economics, and it was still a Soviet East Bloc country. And you could exchange dollars for forint, which was the currency, at a bank and get one rate, or you could go to a trusted black market dealer and get like twice as many, right? And I hear people say that the real price of silver, and I don't know that I agree with this 100%, but I do believe, I do agree with it to a large extent. The real price of silver is really what you can buy it for. That whatever people say, oh, the premiums, and and right now premiums are low, right? I mean, premiums on silver are very low, but it's at times, if there is a shortage and premiums sky, well, that's the price of silver, and you could, even when we've had these shortages, you could sell your silver back at a big premium. So isn't that the real price?
Definitely. That's my view also. I think that the price you can get the physical metal is the price. And of course, it varies greatly, because if you go to countries such as my country in Israel or in the UK, then you need to pay a large value-added tax on that silver. As far as I'm concerned, this is the price of silver here in Israel. You can't get silver for less than that. And
Right.
of course, here in Israel, we also need to pay very high shipping costs. And don't ask. I mean, like, our cost here in Israel is far, far, far higher than it is in the United States. So,
Yeah.
but I treat that as the real price, because
Right.
if you, for instance, if you try to sell silver here in Israel, you will recoup some of those
Yeah.
costs, because, of course, because it's hard to get. So if there's actually somebody, and there's very few, very little supply, private people selling their metal back into the market. So you're going to recoup some of that premium that you paid, because there's very little available.
Yeah. Yeah. Oren, before we wrap up, I want to say a couple things to the most important person in this video, and that's our viewer. Number one, thank you for being here. Number two, go check out Oren on YouTube at thesilverhermit.com. This guy, I really do believe, is one of the brightest minds in the precious metal sector, and a very nice person, somebody I consider a friend. But there's two more things that you dug up in your research that I thought were fascinating. One in particular was this data on the COMEX, and that if silver, I'll let you explain it, but if silver were only, that's where I got that headline headline that I put in with 20-cent silver. Why don't you explain that to the viewer?
Well, first of all, you flatter me, because as the saying goes, if I manage to look further, it's only because I'm standing on the shoulders of giants, and of course, before me there are analysts out there who have been studying this market for decades, and we owe a debt of gratitude to them. So, I'm a beginner compared to them. So that chart that you mentioned, it's quite an amazing piece of evidence. It compares the theoretical price of silver if it was traded only during COMEX hours, on one hand, and only if it was traded outside of the COMEX hours on the other hand, because of course, precious metals are traded around the clock, 24 hours a day, because they're traded around the world, not only in the COMEX. And if you compare the two series, then you get something amazing. You see that if silver was traded only during COMEX hours, it would reach like a ridiculous price of something like 20 cents per ounce right now. Whereas if it was trading only outside of the COMEX hours, it would currently be trading at around $200 an ounce. And this discrepancy is amazing. I mean, like, what can you say? It simply demonstrates how, on average, the price during COMEX hours always falls, and the price recovers once the COMEX is closed. So in a normal market, you wouldn't expect to see such a discrepancy. It makes no sense.
Yeah, it's crazy. I like the idea. I wish maybe more fuel to the fire. Let's just close the COMEX down.
We'll do that one day. It's going to happen.
Yeah, right. Well, they only have 42 million ounces left, Oren. So, it won't take us less than $1 billion to wipe them out, basically.
Look, I don't think they're going to close ever. Frankly, I think they're going to go on existing, but they may become irrelevant. Like, it's going to be a number written there. It's like, just as you were telling us about the official exchange rate of the foreign to dollar, right?
Mm-hmm. Yeah.
So the exchange rate, the official exchange rate was there, but nobody was treating it seriously because everybody knew that you can get out on the street in the black market, you can get a better price. So nobody was treating seriously the official price. And I think the COMEX is going to end up this way. It's going to go on existing, but there's going to be very little trade on the COMEX, and nobody's going to treat it seriously. It's just going to be there, but nobody's going to look at it even.
Well, and I had a conversation with Vince Lanchi a couple of weeks ago, and I hear other people talking about this as well. Do you think that we are moving in that direction, or that the trend has started where the COMEX and the LBMA are already becoming less relevant? I won't say irrelevant, but less relevant, because we have the Shanghai Gold Exchange, the Shanghai Futures Exchange, and I'm hearing things, and you have to kind of parse through the data, but you hear constantly that like silver is oftentimes traded $2 or $3 more per ounce on the Shanghai Gold Exchange, and that a key difference is that exchange is much more. It's almost like the inverse of the COMEX, whereas the COMEX is mostly make-believe paper silver that's traded. The Shanghai Gold Exchange is the opposite. It's more of a physical market. Do you have any thoughts or insights on that?
I think the indicator of that is the premium. I think the larger the premium, the less relevant the spot price becomes.
Yeah.
And that's your indicator. You need to watch. Of course, we don't want to see the premiums going sky high. On one hand, those who are already or still building up their position, of course, they need to hurry up, of course. But I think once you see like premiums, like the price, the physical price separating completely from the spot price, this is when you know that the COMEX has become irrelevant.
Interesting. Oren and I are going to do another video, so stay tuned for that. Our next video, we talked about how the price is manipulated. Our next video, we're going to dive into the reasons why it's manipulated. The kind of the history lesson. People love to hear about what went on with, Roosevelt and Nixon, and kind of the motivation as to why it's manipulated. I do want to end with this, though, in regarding what we're talking about here, which is the how it's manipulated. You brought up a point that the artificial low price it discourages production, but with investors, it's demoralizing. And I guess what would your message be? I guess if you want to touch on that it is demoralizing. I think people get, I think a lot of the people that maybe engaged in the silver squeeze a couple of years ago, and just people that have bought silver, and I can feel it myself sometimes, right? I mean, I've been buying silver for decades, and on a day like today, even though we have an official reason why, according to Wall Street's twisted logic, as you said, why silver is down 4 or 5%, it still can feel demoralizing.
Yes, well, there's no simple answer to that question. Yes, the price smashes are demoralizing, even to people like us who deal with precious metals all the time, who know how it's being done, why it's being done. It still affects us emotionally because we're flesh and blood. We can't detach ourselves from our emotions. But what we need to do is we need to develop our conviction, our determination. We need to make ourselves stronger. We need to try as possible not to take the spot price too seriously. Once you think about it as a show, once you think about it as an artificial construct, then you become desensitized. You're not hurt as much. You will come eventually to the point that you can simply laugh at it because it's getting so ridiculous. Going to see the price drop at exactly 10 o'clock New York time. Just like any other day. What's new? Because I'll tell you why. Because you need to think about the end game. You can't expect, under the circumstances, the crazy circumstances that we're seeing today, you can't expect the price of gold and silver to reflect continuously and rise gradually and reflect the rate of inflation. It's simply not going to happen so long as there is a manipulation. You need to look forward to the day in which the manipulation ends, knowing that when the manipulation ends, there's going to be a huge correction. There should be. This is what I believe will happen. That's what logic dictates, that one day when the manipulation ends, we're going to have this huge correction, and the price will need to correct up to reflect the price, to reflect the true conditions of the physical market rather than the futures market. And you need to stop thinking about what is the current price, the official price. You need to think about what's going to happen in the future.
Mathematics shows no forgiveness on the altar of truth. I love that saying, right? In the end, as long as 2 + 2 = 4, we know in the long run that that silver will be okay. And the final thing that I'd like to say is that a lot of people, including myself, it's easy for us to focus on the dollar price or the euro price or whatever national or wherever people are of silver. And really, when you're looking at an ounce of silver, like I am right now over there, I'm looking at an ounce of silver.
Yes, that's exactly what I have one here on my desk as well. Always I have a few ounces of silver. Of course, I don't keep any, precious metals at home because I speak about them publicly. So I don't dare keep precious metals at home. But I do have a few ounces of silver on my desk just to remind me how they look and how does physical, real money, how it looks, what it looks like. And, to hold it in your hand, the physicality of it, it's just real. Unlike, all those digital assets, when I hold it in my hand, I know that nobody can hack it away.
Right.
out of my computer, and no bank can simply eliminate it by pressing a key.
Yeah.
And that's the
Oren,
great thing about it.
thank you. And like I said earlier to our viewer, you can look forward to our next video where we're going to talk about the why the silver price is manipulated. We'll go through an interesting conversation about the history and maybe the history of silver price manipulation. Again, Oren's channel is The Silver Hermit on YouTube. I think you also have a Substack as well. Is that correct,
Yes,
Oren?
I upload all my articles in written form. So if you would rather read it rather than listening to my voice, then you can check out my Substack. And on my YouTube channel, there's a link to my Substack.
Yeah, well, I think it's in my mind, there's no doubt after our conversation, due to an overwhelming amount of evidence that the silver price is manipulated, pushed around, but that as you communicated to us, in the long run, right, market forces will prevail. Oren, thanks for joining us, and we'll look
Thank you.
forward to
Thank
seeing
you
you
very
next
much. My
time.
pleasure.